Kia ora, I'm Mary Jo, Kiwi Bank economist. So May is shaping up to be a pretty massive month, filled with policy announcements and data releases, and to kick things off, the Reserve Bank provided us with an update of the financial system. And the key takeaway from its biannual financial stability report is that the Reserve Bank is willing to further tighten macroprudential policy if required, whether that's through existing tools or new tools like introducing debt-to-income lending restrictions. In this ultra-low interest rate environment and the hunt for yield, the housing market is posting nearly 25% house price gains. And the Reserve Bank noted a rapid rise in high-risk mortgage lending. Now, while the stock of high-risk lending remains low, the recent growth in this type of lending will become a concern if it were to continue. For now, the Reserve Bank will want to wait and see how the reinstated loan-to-value ratio restrictions and the government's recent changes around housing tax policy will impact the market. We're expecting house price growth to start to slow over the second half of this year. Now, also out this week was the March quarter labour market report, and we saw that the New Zealand labour market continues to improve. The unemployment rate fell further from 4.9% last quarter down to 4.7%. Ever since the nationwide lockdown was lifted last year, economic activity has rebounded impressively, and that's seen employment slowly recoup last year's losses. 15,000 more people were employed over the March quarter, and women made up close to 80% of that increase. As we know, women were the hardest hit by the pandemic, with the female unemployment rate shooting to 5.7% at the height of the crisis. But these outcomes are gradually improving. Now, there's still slack in the labour market. The underutilisation rate, which is a broader measure of spare capacity in the labour market, remains elevated. At 12.2%, the underutilisation rate is still high above pre-COVID levels. So there's still a significant amount of people that are wanting to work more hours. And the Reserve Bank will want to see this measure continue to improve alongside the unemployment rate before they can make any changes to monetary policy to be sure that the labour market really has recovered from the COVID shock. Now, nonetheless, a 4.7% unemployment rate is a truly remarkable outcome. The New Zealand labour market is in a far better position than we had thought possible 12 months ago. And the resilience of the labour market really reflects the underlying strength of the New Zealand economy. That's it for this weekly wrap. I'll talk to you in the next one.